Interest rate survey shows that rates may have leveled off. Now, that's a good thing here. Um, One of the things that I've found is that interest rates are going up and going down, and it's hard to predict where they're going to end up. But with the rate friendly jobs numbers that came out today, that showed a slight decrease from 3.8% to 3.5%, which is, what the Federal Reserve is really looking at right now to lower interest rates. They may not have to raise rates again in their September 19th and 20th meeting, and that's because we're looking at some fairly tame consumer price index numbers as well. So, with that being said, here, what I'm showing is that the economic news is still not driving interest rates lower very much. Let's take a look and see what happened to the Freddie Mac um, interest rates over the last year. So in this chart, you can see that interest rates came down just a little bit. Last week, they were 7.28, I believe, and now they're 7.18. So that was a good, and maybe this means and is signaling a direction in lower interest rates. Now, at the beginning of August, at the end of September, we saw 6.8% interest rate. So, we're looking at about a 0.25% change over the month just in interest rates. And it's hard to determine exactly what's going to happen next. But let's go through and see the charts. I'm going to share with you our mortgage-backed securities here. Let me do that really quick here. So you'll see here that well, let's first of all go to the 10-year Treasury. So the 10-year Treasury, you can see, was the highest it was 2 weeks ago. And then over this last week, it's kind of come down. And then today, even with some consumer-friendly jobs numbers, we're seeing that interest rates kind of gone up just a little bit here. There's a really great floor of support right here. Then they broke down beneath here. Hopefully sometime, we're going to see that interest rates will keep on coming down this way instead of swinging back up. Now, one of the reasons this may be a little bit higher today is because we're looking at a long vacation filled weekend, so I mean, it's the end of the summer and everybody's going to be leaving probably early today. We're not going to have any interest rate numbers for Monday because it's a federal holiday being Labor Day, and so sometimes that does inch up. So let's go look at the bond market right here. You'll see that the bond market is just really stuck on this line right here, which is a good thing. And then, that'll show that, and this is more indicative of what interest rates are really doing. The 10-year treasuries, they can flow a little bit differently. So in reality, interest rates have not moved for the last, 1, 2, 3, 4 days, which, is a good sign. Now, I would have loved to see interest rates come down a little bit today because, again, we had some really great news, but probably Monday, Tuesday or Wednesday, we should see something maybe just a little bit better. Now, one of the things that we're going to be looking for next week is really the initial jobs claims will come out. That's about the only information that's going to be new. I mean, there's some mortgage application, ISM servers, the unit labor cost, productivity, all those kinds of things. But the main thing is going to be initial jobs, and that's coming out on Thursday. So the question is where are interest rates really going to go? That's anybody's kind of, guess right now. I would say let's talk about the next 6 months. I think during the next 6 months, we're going to see interest rates come down just a little bit. I don't think it's going to come down more than 1%. I think we'd be lucky to see somewhere in the neighborhood of like 0.5 to 0.75% between now and the end of the year. But for the next week, I think interest rates are going to stay relatively the same unless there's something that comes up that we are blindsided with, like I don't know what that could be. Maybe a war, but believe it or not, Desert Storm came out and that was good for interest rates. So I would hate to see us, have something that dramatic. But the bottom line is, I think if you're looking to lock in a loan, I think you should lock in the loan as soon as you get a contract still. There's still some upward pressure. But the other good thing is that, with most lenders, you can renegotiate your rate if it comes down 0.25% or more, which is a smart thing to do. So lock in now. it's still a great time to buy, even though rates are high. I'm going to have a video next week that I'll share with you to show whether it's better to either rent or buy right now. So anyway, with that, have a safe and happy Labor Day weekend, and we'll talk to you soon. Thanks.